We're going to go through the property application today, and as many of you also know, we get our Acord forms from Acord Advantage here. If you have an agency management system, you can also get Acord forms from the management system. But basically what we're doing is going over the property application, which is going to cover all the questions that you'll need to ask in order to insure a commercial lines property. One thing that I just would like to specify here before we get too far into it is that property is actually going to be limited to at a location. So for example, if you have a contractor who has business personal property, what's sometimes referred to as contents, I guess, but business personal property that they own and they carry it along in their trucks, obviously that would need to be covered on an inland marine policy. However, if they have, tools and stuff at a shop, that's going to be what would be put on the actual property section, and usually it's the 1,000 foot radius around the location that's covered for the business personal property in that. So that is the property section that we're going to be going through today. Whenever you actually complete a property application, you'll also need to include an Acord 125, which is the general application, and that goes for any of the other lines of business. As we've mentioned before, you always fill out an Acord 125, that's like the general info, and then you just add the application for the line of coverage you want to include. So if you want liability and property, you'd fill out the 125, which is the general application. Then you'd fill out this property section, which is the Acord 140. And then the liability application is the 126, so then you would just complete the 126 as well. So that's all there is to it on these Acord forms. The trick is to know which boxes to fill out, so that's what we're going to go through here today. And I'm just going to start with the date here at the top. I think it's the 7th today. Whoops. 3/07/12. Alright, we're going to leave this part blank if we're sending it into Access Plus. We don't need to put in the agency name. We do need to put in the effective date though. And so let's just say that it comes up on 4/1/12, because like all good agents, we are submitting things at least a few weeks in advance. I know I always do. So I'm just kidding. Obviously, that is a bit of sarcasm there. Named insured, we can leave. Actually, we need to fill out named insured. Let's put down Joe's Plumbing, so we can use a contractor example. And as we explained on the 125 and 126, if it's a sole proprietor, it's Joe's. It'd be like, for example, an individual owner. It would be like Joe Smith doing business as Joe's Plumbing. And then if it is a corporation, it would actually be something like Joe's Plumbing Inc. or LLC. Now, it's just important to note that the named insured here, and this is important, that this is the actual entity. So if it is a sole proprietor, you do need to put down the individual's name and then what they're doing business as, not just Joe's Plumbing. That can actually cause some problems when the policies go to be written. So just make sure that you're actually putting the entity down. And let me pull up my email here just in case there's any questions on that. Okay. Okay, now we're going to get into the meat and potatoes here. This is the main part of the property section where people sometimes get confused. Premises number and building number. Okay. The Acord 140 has 2 pages, and they're both the identical same page, so they look the exact same. The reason why they do that is so that you can have, basically more than one building, and obviously if you have 4 buildings, you're going to fill out 4 of these pages. Each page is designed to cover a building. So on the 125, in fact, let me just pull up the 125 real fast here. On the 125, we actually broke down what needs to be, how the locations need to be popped on there. Okay, let me bring this up here for you. Okay, so if you notice, this is the 125, and I'm going to go to page 2. Okay. Sorry. On page 2 here, you'll notice that what we did was we had, like, let's say this is Joe's Plumbing here. They had location number 1, which is the first address, and location and building number 1, okay? And then they had location number 1 and building number 2, but it's the same address. Then we got down to location number 2, which is a different address. It's pretty much as simple as this. A location means address. So if you have 3 buildings at one address, that would just be one location, and then you would break it down by building. So you'd have location number 1, building number 1, location number 2, building number 2, location number 1, building number 3, if there was 3 buildings at the one location or the one address. And then when you go to the new address, you would go to location number 2, because it's the second address, and start back over at building number 1. So really, once you get that concept, this next part's pretty easy. Again, just start over, and each location just means address. Let me close this. Okay, so I don't know why they changed their verbiage and started to say premises instead of location, but this is the same thing as location. So we're just going to say premises or location number 1, and again, it always starts at 1, so we're going to say building number 1. On the next page, you would have premises number 1, building number 2, if there was 2 buildings at the one location. Now, for this plumbing contractor, let's say that the street address is actually his house, and we'll just say 123 Main Street. Okay, don't have to put in the town if you don't want to. Building description, we're going to just say workshop / garage. This is like his garage / workshop outside of his house there. And I'm purposely doing this because it's going to get a little confusing down here, but that's okay. Subject of insurance. There's 2 subjects of insurance. One, and we'll just make it really easy, there's 2 possible ones. One is a building, and the other one is business personal property. In fact, you can just put down BPP. Whoops, property. Okay, so those are the 2 subjects of insurance. Now, obviously, if they rented the building, you would just remove this and only have the business personal property. But if they own the building and the contents, then of course you'd put both down here. So let's just kind of click on over here. We just need to have an amount for the building, and I'm going to have some people probably disagree with me on this because it depends on the area. But if you don't have an actual building cost estimator, because maybe you don't have a commercial lines carrier directly at this point, so you can't go in and plug in the info, you're going to have to kind of ballpark the amount of coverage, and I would strongly recommend not using the existing policy. And the reason why is because the cost of construction has gone up so much just in the last couple of years that unfortunately the premium is going to usually come back higher than what you present them after they write the policy, because they're going to realize that it's underinsured. So I would usually just take the building square footage and take it times about $120 a square foot. That'll at least give you a kind of a ballpark, I guess. And again, it's different for every area. If you talk to contractors in your area and they tell you that they can do it for $125, then that would be what you want to do there. So I'm actually getting out my calculator here. I'm going to pretend like it's 4,000 square foot times $120. So I'm looking at like $480,000. And that's going to be pretty conservative. Okay. Coinsurance. Here we always usually want to put 80. That kind of seems to be the magic number. And I'm going to give you a little trick on this, and I apologize if I'm saying stuff that everyone already knows because it's kind of like homeowners. But basically what you're saying here is $480,000 is at least 80% of the building's value. You guys can use that formula in the P&C book if you want to, but for me, because I'm not very good at math, I've found that is exactly what that means in kind of a reverse way, and it's just easier for me to explain that to myself, I guess. So for me, anyway, I always like to think that this dollar here is at least this percentage of the building value, or if we were talking about contents, this dollar here is at least this percentage of what they actually have. So essentially what it does, it gives you a 20% cushion on the loss if it's like inflation hit or something, or if it's underinsured. So that's all there is to that. Valuation, you either put down replacement cost or actual cash value. Another sidebar here is that actual cash value rates are a lot higher than replacement cost rates, just like on homeowners. So usually replacement cost is the way to go. Causes of loss. This is where you put special, broad, or basic. And We almost always put special because that means that everything's included unless specifically excluded. Inflation guard. This is everybody's preference depending on what they feel like the U.S. inflation rate is. Right now it's at about 4.5% to 5%. However, the cost of construction materials has been going up more than that, so personally I put it right now at about 8%, but that's everyone's preference. We could talk about that all day. Now, and what this inflation guard does is every year it's automatically going to increase the limit of the building so that you don't have to go and edit it after they already get the renewal and they get a premium, and then you have to increase it to keep up with inflation and then explain to them why you increased their insurance. Basically, it automatically does that for you, and so that way next year they get the renewal and it says $490,000 and then the premium went up accordingly. So that's what that inflation guard is for, and it is very important. Most buildings that are underinsured is because the agent didn't understand how to properly use the inflation guard. Deductible, let's just put down $1,000. That seems to be pretty common these days, or $2,500. And I'm going to leave the blanket thing blank for now, and we'll talk about that later. Business personal property. This is the contents, or basically anything that they own that's not physically bolted to the building. So let's just say that they have $100,000 in contents, and we're going to do the same thing here. 80% is kind of the magic number because it gives you that cushion, but it doesn't really cost much more. If you went 70, you'd get charged an arm and a leg, and 90 and 100% coinsurance doesn't really cost much more than 80, or cost much less than 80. So that's why we almost always use 80 to give ourselves that E&O protection, because again, $100,000 is at least 80% of what they actually have in contents. That's what that's saying. Valuation here, again, I might just throw down replacement cost. Special for the causes of loss. Everything's included unless it's excluded. And then again, inflation guard. Here you might put 0 if you want to. If every single year you're going to check on their inventory. I do personally as an agent, so I always usually put 0 because, let's face it, sometimes the inventory goes backwards depending on the type of business. Deductible, again, you can put down whatever you want here depending on what your customer wants. And that's all there is to it. That's the coverage section of it. And then the rest down here is just kind of like what you do for homeowners. But let's talk a little bit about this blanket section. And some of you are familiar with this. If you are, tune out for a second. I don't want to bore you. But basically what the blanket means is if you have more than one property, okay, I'm going to use my furniture store for example. They have a furniture store and 2 warehouses, and they're located in different parts of town. And basically, the problem is they rotate the inventory out in their store, and they rotate it amongst these 2 warehouses in their store. So the problem is they know that they have about $1.5 million in inventory, but at any given time they don't know where it's going to be. I mean, around certain times of the year they move almost all of it into the store, so they've got all $1.5 million there and barely anything in the warehouses, and then at sometimes they have hardly any in the store and a lot of it's in the warehouses. Now the problem with that is if we put down $500,000 for each location and they had a loss at the store when all of it was in there, then they're not going to be covered in that store, because whatever you put down here for business personal property is based on this building. So the way that we can use a blanket is we can put, like for example, blanket number 1, 100,000, and then on the next page we put down again blanket number 1, 200,000. What that means is you're ballparking how much is at each building, but technically they have coverage to up to, in this case it would have been $300,000 at either location if they like shift things around. So I'm going to make an illustration of that for the next one. I apologize I don't have one ready, but hopefully that makes sense, and if anybody has any questions I'd love to answer those at the end of the thing here, or if you want to shoot me an email, because that's a very useful tool. Very useful tool. Okay. Alright. We might, if we have time at the end, to talk about functional replacement cost, because that's sometimes a useful tool with commercial lines too. But we'll keep it simple and go ACV and replacement cost for now, and then maybe bring it up later if people have time. Okay. So let's scroll on down. Here we have additional information, which is business income. Basically, it's a good idea to always check this. Most business owners' policies have a business income, little endorsement on there, which basically gives a person coverage if they're out of business for a while because of a covered cause of loss, like a fire or something. that their utility bills and, in some cases, key employees' salaries will be paid while the business is getting back up and running. Now, the advantage of that, obviously, is because if you actually look at the statistics, a lot of businesses go out of business not because of the loss itself, but because they had to sustain certain expenses in order to hold maybe their mortgage or their utilities or something for the 6 months that they were out of business, and they weren't making income, especially in the beginning phases of a business. That can be very, very dramatic. So, always include business income, in my opinion. And technically, a little side note is you do not have to include an 810. So even though it says it, disregard that. That'd be only if you really want to get specific on the business income, and that is actually a webinar for another time. So the basic business income coverage can just be checked and not filled out in 810, and I'll go into more detail on that at another webinar. Okay, additional coverages. Spoilage is coverage for any perishable item that's kept in a refrigerating type unit, and if they lose power, those perishable goods will basically die. So, for example, flowers inside of a freezer or at a floral shop, you would want to have spoilage coverage, because if the power goes out, the flowers die. It could cost up to like $10,000 to $15,000 depending on the size of their freezer, how much flowers they have in there. Restaurants, another good example. Power goes out, refrigerator dies, all the meat and all the food goes to waste. That's where you're going to want to put down yes, describe the type of goods that are inside the refrigerator and that they are in fact inside of a freezer or something, the limit and the deductible. If they have some sort of a maintenance agreement where someone checks the freezer once a month or something like that, you pop down yes or no here. And basically what you're talking about is, do you want it to be covered for power outage? And if you really want to get an expensive premium, put down selling price instead of the cost that it takes them to replace it. Selling price is how much they would sell it for. Usually people don't choose that. It's pretty expensive. Most of the time they just want to be indemnified for how much it would cost for them to actually get the contents back inside that refrigerator. So that's all there is to it. If you want sinkhole coverage, you can accept it or reject it here and pop down a limit. If the property's been a historical landmark, again, you can put that down there. But I'm going to go with what's most common, which is then heading down to this section here. And we'll just quickly fly through this. Construction type, it's going to be either frame or masonry or joisted masonry, just like on your homeowners. With the exception, in commercial lines, sometimes you'll run into steel. Which would be like those Morton buildings that have the concrete foundation and like just the steel shell type of thing. A lot of mechanics and contractors work out of those. But let me actually just put that down. Let me just put down steel. Okay. And we're just going to leave it at that. We're not going to get into non-combustible stuff because that's a whole other thing too. People can improperly insure buildings because it takes a lot for it to actually be non-combustible. So it's best to just put down steel there, and again we can cover that a little bit later here. Distance to fire hydrant, same thing as homeowners. You can actually leave that blank. They do like a protection class. You can usually plug the zip code into your personal lines carriers and it'll give you a protection class. Number of stories, number of basements, when was it built, how much of total area is there. I think we said 4,000 is what I was using that number up above. Okay. When was the wiring, roofing, plumbing, and heating rebuilt? Again, this is just like homeowners. I'm just going to say the roof was redone in 2004. Although if it's a steel building, chances are it might be original. And we do need to put down roof type. Metal. Could be poured. That would be like a flat roof that has the gravel and tar. It could be rubber membrane if it's a flat roof. So just because it's flat, don't assume it's poured. There is a rating difference between the two, rubber membrane and actually poured gravel and tar. You'll just want to check on that. Okay, everything else is pretty normal. If there's a heating stove or something like that, you'll need to pop that in. If there's a boiler, you'll want to just put that down here. But basically, most of the time, it's going to be something like forced air. Oops. something like that. Again, just like a homeowner's. Okay, down here, right exposure and distance. I'm going to say that to the right of the building is a retail store, and it's about 75 feet away. To the left of the building, there's manufacturing plant, and it's also 75 feet away. Front of the building is a street, and the back of the building is a parking lot. Again, just kind of what's around it. And again, I forgot. Darn it! I forgot we were dealing with this guy's backyard. In this case, it might be residential. Residential. Might be like a field or something here. Burglar alarm type. In this case, you do have to put down something. If there's no burglar alarm, put down none. Otherwise, you won't get a quote because the underwriter will think you just skipped it, and this is from the carriers actually. They'll bounce it back to you, or bounce it back to us if we submit it. Same thing down here for fire protection. If there's none, put none. If it's not sprinklered, put 0. Okay. If they do have a burglar alarm, you don't necessarily need to fill out the certificate number and expiration date, but you do need to say whether it's central station or local gong. Basically what that means is central station, it rings to the security system, headquarters like ADT, and then they send a cop over. Local gong just means it's super noisy, like a smoke alarm. So like fire protection, same thing here. Does it ring to an actual place that dispatches fire trucks, or is it just really noisy so that people run out before they catch on fire? With keys just basically means, does the central station or like ADT have keys to your property? And that's all that is. But those are important things. Basically, this line here and this line here need to be completed, and you'll get huge discounts if they have burglar alarm and a fire protection. So the more you can answer here, the lower your premium is going to be by a landslide, especially if they have obvious coverage. Just put none if they don't. And that really is all there is to this, because again, the second page is identical to the first page. If they have any additional interest that they need to include, you would just pop those in here. And I'm going to go ahead and open it up for questions here.